Welcome everybody to the August 2021 Markets Update. Really excited today to be joined by our new Chief Investment Officer, Graeme Bibby. And what we'd like to cover off today is an introduction to Graeme, and really get his outlook on markets and really what we're seeing playing out both domestically and around the world. So Graeme, firstly, welcome. Great to have you on our first official investment briefing.
Great, Matt. Thank you for the introduction and a little bit of my background. I've been in investment markets for 25 years. It's not all been in one place. It's been across multiple organisations. So everywhere from a superannuation fund, BHP, AllianceBernstein and fixed interest funds management, Mercer and Russell and asset consulting, AIA in asset management for the insurance sector, and mutual trust as CIO, and that in my previous role at AIA.
Thanks, Graeme. A couple of sort of initial points around your engagement and really what you're looking to bring to further enhance our investment offering. The concept of retail deserves better. What are you referring to there?
That's something that I've mentioned in a few discussions to date, and having worked in the institutional field for most of my career, and then moving into wealth management in my last role, I've seen that there's a lot of investment opportunities that are available to institutions that retail investors just don't see. In particular, things that are like private equity, many property investments, and just things that are often high returning that retail don't see. So what we'd like to do, and I'd like to do, and passionate about, is bringing some of those ideas to a retail audience.
Yeah, fantastic. And just on that particular point, what's this institutional approach you think you can also add to our investment offering?
Well, I think part of it is just depth of knowledge and having a structured approach. Like when I worked for BHP Super way back, I was introduced to Russell Investments, which is the leading investment consultant at the time. And that was really the grounding for best practice of how to approach things, even from an institutional point of view. And it brings a lot of discipline and process to what you do with investments, and comparing against the very best in the world. So when you're analysing things, what the highest benchmarks are, rather than just looking at an investment and thinking, yes, these are smart people.
Yeah. And what about the discipline framework? Like, how important is a discipline framework to making sure we are absolute best of breed with our investment approach?
Well, I think it goes back to things like if you plan and you plan. If you don't plan, then often you'll fail. So there's that sayings around that sort of thing. I'm an engineer by background, so very structured approach. If you don't design bridges properly, they fall down. In finance, it's actually okay to have a fair amount of losers in your portfolio, but in aggregate it works. Now you can still have a good portfolio, but you can have a structured approach to it and improve your odds of succeeding, even though you might have a few losers here and there. So that process, everywhere from stock selection, putting together a portfolio of fund managers, to how much assets you have in shares and bonds, and being prepared to move them around, but with a disciplined framework for doing so.
Yeah, fantastic. Now, what I'd like to do now is get your thoughts on how the outlook is for the balance of 2021 and maybe a little beyond that. So a couple of comments on the broader economic and macro environment at the moment.
Yeah, well, on how I look at it, again, it's through a disciplined framework, and a lot of it goes back to the likes of Bridgewater and Ray Dalio and many other good investors who identified that certain stocks, sectors, investment styles and asset classes perform differently in different environments. So when you have a accelerating growth and inflation environment, look at the policy settings. Do you have an expansionary or contractionary policy? How much liquidity is being created, partly through credit and partly through institutional and retail flows? All of that points towards, in the last year, an amazing year of returns. And what we're seeing is a return to a slowing environment. And we're seeing that regardless of this Delta variant. That was always going to happen, and that was always in the forecast. So we are going to see a 6-month period of slower economic growth, but that doesn't necessarily mean that markets are going to fall dramatically, and they are likely to have some correction during the next 6 months, but will return to in a way, an echo of the reopening trade early next year. So there's opportunities, I think, for the 12 months still to be reasonably positive, even though we're heading into a period where we've got a natural slowing going on.
Yeah, for sure. We're in the middle of reporting season in Australia, and how you're seeing the results to date. Obviously, we're only halfway through that, but how you're seeing results to date, and what are the types of assets of interest to us?
Well, through reporting season, we've seen some very good results, not too surprisingly, off very bad results from the 2020 year. So again, that's the base effects, and many companies are bringing back their dividend programs, having special dividends. So banks and resource companies have been particularly strong in that environment. The banking sector and finance has had a great year because of basically the downturn, and in terms of the losses that they had provisioned for just didn't happen. So they were able to release those reserves and release them to profits. So that's been quite positive. Mining and resources has been very positive as well, not just on the recovery, but also underlying trends in ESG and green energy. So that's been helping. And then we've seen a massive run in small caps as well, which were really out of favour the year before in 2019, 2020. And so they've had a great year. So we see some rotation back, so a bit of a pause in small caps, some rotation and away from the absolute cyclical stocks back towards some of the safety and quality. So we're looking at upgrading the quality in the portfolio, and we've been working on that.
Yeah, fantastic. And what about internationally? Like how are we seeing the world playing out with obviously still parts of the world dealing with COVID, the Delta variant? How does the outlook look for the next 6 to 12 months given these issues?
Yeah, we've started to see some of that coming through in the numbers. So we had US retail sales disappointing quite dramatically yesterday. And before that, we've had some of the purchasing manager indexes fall, which have started to do so from about 3 months back. So that's an indication of the manufacturing side of the economy. And even the services side, people are pulling back a bit, just as concerns around Delta have come through. But as I said, some of this trend was happening already. So we were getting a rotation of off the peak anyway. Yes. But we'll see that normalise and sort of come through. So value as a strategy also had been performing quite well. Still may perform a little bit for a while, but yes. We'll see a rotation back towards growth, particularly as 10-year bonds fall. And there's a flight to safety at the moment to the US dollar, and that's been strengthening against most currencies, including the Aussie.
Yeah, great. Just now, some thoughts about the process we follow, and a little bit of the research. We subscribe to make sure our view is obviously on point, and a little bit about sort of the global reach you have, and I guess the opportunities we have to speak to people around the world to make sure our views are absolutely on the market.
Yeah, well, there's two things there. One is the networks, which I've developed over the years, and the other is the some of the independent research that's beyond what brokers you'll hear from them. And it's important because independent research, they're not selling you something apart from their own research. And I've developed that, particularly market outlooks over the last 12, 13 years. And I prefer to look for research that will be more fact-based, so very much based on the numbers, and some of that is looking at the forecasting of what regime we're in. So what economic regime are we in, and that then frames what assets are likely to perform or not perform based on actual back tests. So that's that aspect of it, and it is looking like we are getting that slowing, and there's projections through next year of a return back as well into more positive economic performance, and that has implication for assets. The other side is the networks, which as I've worked in different parts of the industry and over 25 years, and the analysts that I worked with at consultants and other places, they've developed their careers and become senior people, including CIOs of super funds and other places. So that network, I've got friends at the Future Fund, many of the insurance companies around, and many of the super funds. So often when I've got an idea about something or a manager or a strategy, I can pick up the phone and talk to those people. Another network is through the private wealth area. And when I was at Mutual Trust, there was a network of multifamily offices around the world, to 8 of them, which enabled me to then exchange notes and talk regularly. We were meeting every 6 months. At AIA, I was meeting with the investment team of 14 different countries in Asia every 6 months as well, internal conferences. So all of those things is usually someone somewhere in the world that I can talk to about the vast majority of asset classes.
Fantastic. Well, thanks for joining us this morning, Graeme. Really looking forward to your contribution and making sure our investment offering is absolutely world class. And I think our approach at all points in time is also protecting capital and is getting as good a return as the market. So we're really looking forward to your leadership in that area as we progress, and obviously seeing more of your thought leadership as we move forward. So thank you very much for joining us.